Move to Bharat Forge, where again we saw the numbers. Again, the numbers actually were telling us a bit of softness both in the revenue and the net profit. EBITDA again was up, margins again had declined. So EBITDA growth, but the revenue decline. That was again sort of mixed set of numbers. The stock basically is right in front of you, trading mixed right now. And the question now, EBITDA growth, but the revenue decline. That was again sort of mixed set of numbers. The stock basically is right in front of you, trading mixed right now. And the question now basically is how we should be interpreting this trend, and for that now let me welcome the management, Baba Kalyani, CMD of Bharat Forge. Mr. Kalyani, good morning and welcome to the show. First question, quarter appears to be slightly weak, slightly mixed bag again from the performance perspective. What do you attribute it to, and what's your expectation for the remainder of FY20?
You see, to a very large extent, if you look at our numbers, we've been impacted by the slowdown in the domestic CV industry to a large extent. And I think that pain is going to be there at least for another quarter. Everybody is hoping that the government will come out with some remedial action to deal with this problem, either in terms of creating demand-related policy measures, or let's say liquidity-related policy measures, and that is what will get this industry out of the problem that it has today. And then, everything will just start looking a lot better.
Right, and Mr. Kalyani, that's the domestic market, but the exports are also again looking weak. What has led to the weakness, and which markets again were really sort of denting the growth prospects?
So the quarter-on-quarter degrowth has been largely because of inventory corrections in the oil and gas sector. That's been going on for some time, so that's the only reason why this is coming. Otherwise, everything else is doing reasonably well. The CV business is still pretty good in the U.S. The pass car business is strong for us. We have got many new contracts on the pass car side, both in India as well as in Europe and North America. So that's doing well. Industrial side will continue to do well. We are hoping that the inventory correction in the oil and gas will be over next quarter. So from the third quarter onwards, it should start looking much better. Otherwise, we don't see any big issues on the markets outside, unless of course socio-political and things like the entire deal with China and all that starts getting into a very different state of affairs.
Right, and Mr. Kalyani, in terms of the Indian subsidiaries and the other sort of segments, we have seen a loss. When do we get back into the black from a subsidiary perspective?
That is, the Indian subsidiary is only a quarter's issue. I think for the year you will see profits there, because that's largely related to our defense-related subsidiary in Hyderabad, where we just got an order in the last 2 months for $100 million for exports. So once that order starts getting productionized, all this will disappear. As far as our subsidiaries outside are concerned, as I have said before, we are dramatically changing our product mix to move to lightweight materials. So the demand for aluminum components is much higher than for steel, and we have a very unique technology in this area which gives us an advantage. So we are moving in that direction. So right now it's kind of a transition phase, and hopefully by the end of the year the transition phase will be over. But we will still end up in black by the end of the year.
Right, and you secured new orders worth $30 million for the auto application. What is the revenue recognition plan?
2021, yes. Actually, these orders, so these are annualized 30 million type. So it will go on for a few years, but it will start in 20, probably go to a peak level in 21.
Right, and so what's the update with regards to aerospace, railways, and the defense?
chugging along okay. Defense will go at the same level as we had last year. We are doing a lot of things. We now just got a new order for $100 million for exporting products to Israel from our plant in Hyderabad. We're working on a couple of other things. And all this is happening without the big platform orders. The platform orders will only come, I think, in 21, 22. But we are still doing quite well in that area.
Right, sir. And the Nellore plant, what's the operational plan for it, and the contribution, how's it looking to you?
No, it will start in September. That is the first month of production. So it takes time to go to 100% utilization in a greenfield brand new plant. But it's a very unique plant. It makes very unique products in lightweight material like aluminum, magnesium, and it makes very thin-walled casting. This is what the industry globally requires now, especially with electric vehicles and even the 5G antennas are made in aluminum nowadays with this process. So there's a lot of markets available. We just have to step by step develop the markets and step by step get into customers. We have now more than a dozen customers for this, but it takes time in terms of developing, getting approvals, getting validation, and then the business starts in mass production.
Mr. Kalyani, let's talk about the outlook for FY20 and also again from the perspective of the Class 8 truck orders also, both for the business and then again talking about the North America Class 8 truck orders.
Well, I hope what you say about second half of FY20, it comes out true, then everybody will be in a very happy situation. But right now, I think we are all looking at FY20 being lower than last year. As far as Class 8 trucks are concerned, going into the next year, that is from calendar year FY20, it will be running at a lower level than calendar year FY19. We expect Class 8 to be somewhere in the 270-280 range, and that is already factored in our planning, so we're not really worried about it.
Right, Mr. Kalyani, thanks a lot for joining us on BTVI, and all the wishes to you for the coming quarters. With that, we'll take a short break, but stay tuned as after the